It is 9:15 a.m. Pacific Daylight Time. It is the 11th day of June 2025. This is episode 1113. And we've got a pretty stacked show for you today. We've got some House Agricultural and Financial Services Committee's take on the U.S. crypto market structure bill. That's coming up. Marty Bent has released a plugin, or not actually a plugin, whatever it is that you put on your browser extension. That's what I'm calling. He's released a browser extension called Opportunity Cost. I want to get into that one. Ukraine's parliament is looking at a crypto asset reserve bill, and then economic Bitcoin nodes. Why there's a difference, and why you may want to use one. Bitcoin climbs slightly because inflation slowed in May. That's not my take on it. We'll get into that. Strategy might be causing problems. The whole buying of the Bitcoin and stocking of the Bitcoin and debting of the Bitcoin. You know what I'm getting at. We'll get into that one. U.S. House Financial Services Committee is doing something else with crypto. I've not heard of this one yet. The Clarity Act is in play. And then Connecticut decides to pull out a 1911 semi-automatic pistol, throw one in the chamber, draw back the hammer, point it to their head, and pull the trigger. Yes, they did. They probably will not survive this. I would like to see Connecticut as a state be subsumed by one of their neighbors at this point. Maybe something like, I don't know, is New Hampshire? New Hampshire's close to Connecticut. I don't know if they share a border or not. You know why? Because I'm an American, god damn it, and that means I don't know geography. We're finally seeing quantum biopharma companies buy Bitcoin. That will be the last up for the day. But first and foremost, let's hit the list with this one. Crypto market structure bill has moved out of the House of Committees, or rather the House committees, and the stablecoin action is now pending. This is about the market structure bill. And by the way, it is written by Jesse Hamilton for the good people at CoinDesk, if that's what you think. The House Agricultural and Financial Services Committee sent a major bipartisan message after advancing the United States crypto market structure bill on Tuesday, marking the first of several expected developments in the advancement of digital assets legislation expected this week. The House Financial Services Committee was hashing out some of the final details in a marathon hearing on Tuesday on the bill to set up digital asset market oversight before voting to advance it 32-19, even as the Agriculture Committee vetoed the advance bill 47-6. At the same time, the Senate's legislation to regulate stablecoin issuers was rolling towards a final vote. This year's effort to finally set the United States stage for crypto trading. Oh, here we go. This is it. We'll do the Clarity Act right here. Known as the Digital Asset Market Clarity Act, was the focus of markups, special hearings in which congressional panels consider amendments and put a final polish on legislation before advancing it to the chamber floor. In this case, two House committees were considering the Clarity Act at the same time on Tuesday, and the agriculture panel finished first. Oh, they were first across the finish line. Congratulations, you win. Quote, the Clarity Act provides certainty on digital assets to market participants, fills regulatory gaps at the Commodities Future Trading Commission and the Securities and Exchange Commission. It bolsters American innovation and brings needed customer protections to digital asset-related activities and intermediaries, said the Agriculture Panel's chairman, Glenn Thompson, as he opened his committee hearing. The panel's ranking Democrat, Representative Angie Craig noted that, quote, this is not a perfect bill, but also said that tens of millions of Americans using cryptocurrency will continue to grow whether Congress acts or not. But if we don't act, it will grow without the consumer protections that retail investors need and deserve. You know, protections like those that govern other corners of the American financial system. Pausing just to say this, and look where that's gotten us. Moving on, the House bill outlines the jurisdictional borders between the two U.S. market regulators and establishes a new leading role for the CFTC, Commodities Futures Trading Commission, over the trading of digital commodities, which represents the bulk of crypto activity. Because the two congressional committees each oversees different elements of the crypto market, commodities and securities, each has a piece of the relevant jurisdiction, so the panel's work to amend the legislation will have to be melded together. Congressional staffers said that the products of successful markups from each committee would then be combined into a unified committee report to be considered by the wider House of Representatives. The legislation has been continually overhauled right up to the markups, with Republicans hoping to keep enough Democrats on board that a bipartisan support can influence how much the Senate embraces the bill if it passes the House. But Democrats in the House Financial Services Committee were still meeting to examine points of the bill they have concern with as recently as late Monday. Representative David Scott, one of the Democrats who serves on both committees, expressed the discontent of some of his party. Quote, the bill allows crypto firms to bypass proper oversight and ignore investor protections, as I have outlined on multiple occasions here and in the Finance Committee, he said, arguing that the bill does not properly fund the commodities regulator. Quote, the CFTC, though essential, is not designed to oversee retail-facing investment products. Pausing to say he's correct. He's absolutely correct about that. Scott added, this is a gift to the worst actors in the industry. Others remain concerned that the legislation doesn't directly block senior government officials, most notably President Donald Trump, the Orange Man himself, from personally benefiting from crypto business interests. Again, pausing to say a name, Elizabeth Warren. Let's do another one, Nancy Pelosi. I'm just going to go ahead and throw Mitch McConnell in there. I don't know if he's rich as snot, but I'm pretty sure he's got a shit ton of money. Why do I even bring these names up? Because none of them have any business having the amount of money they have on the salaries they make unless they know something that nobody else in markets knows. I'm talking about insider freaking trading here, ladies and gentlemen. Let's not give these people a pass. Whether they're blue or red, it doesn't matter. I don't give a shit. There's no way Nancy Pelosi could have the amount of money she has. She is a better trader than Warren Buffett. She does not have the training Warren Buffett has. There's no way. She's insider trading on information that's privy to her only before most other people, especially plebs and retail, ever get that information, and therefore is able to completely capitalize on it and yet tell me and you that we're breathing too much carbon dioxide out of our lungs. It's maddening to watch these people succeed in every single thing that they do. And the rest of us are just sucking swamp water, and yet we still vote these assholes in. I include Mitch McConnell just because I assume that he is probably a scumbag just like the other two, right? But I just need to make sure that everybody understands I'm trying to remain neutral here. They all suck. Maxine Waters, who also sucks, by the way, the top Democrat on the House Financial Services Committee, raised similar concerns while she introduced an amendment Tuesday to the HUD Transparency Act of 2025 that would direct its Inspector General to investigate a suggestion that the Department of Housing and Urban Development might evaluate crypto or stablecoins for payments. Quote, unfortunately, Trump and his administration are trying to force crypto down the throats of people living in HUD-assisted housing. Wow, that is one hell of a statement there, lady. Quote, I, for one, would want to know if HUD is using Trump's stablecoin, how they choose the stablecoin, and what fees are being paid into the president's pocket, end quote. Pandering. That's just pandering. She literally knows nothing about the structure of what's going on. Doesn't mean that I do, but it's very clear she's talking out of the side of her mouth. Anyway, during Tuesday's markup, Democrats of the Financial Services Committee offered dozens of amendments to do everything from block Trump from profiting off of or engaging in crypto ventures to setting requirements for the minimum number of commissioners the Securities and Exchange Commission and Commodity Futures Trading Commission must have before engaging in any rule making. These amendments all failed along party lines. And then we have the Genius Act. So where are we on the Genius Act? While the House moved forwards with the Clarity Act, the Senate is nearing a potential final vote this week on the Guiding and Establishing National Innovation for U.S. Stablecoins of 2025, also known as the Genius Act, which would erect guardrails for the issuance of U.S. stablecoins, the dollar-based tokens that underpinned a wide swath of crypto trading. Majority Leader John Thune, the Senate's top Republican, who has recently joined the effort to push forward the stablecoin legislation, made a procedural move on Monday to soon advance to a final vote. Industry insiders are preparing for a vote as soon as, well, today, Wednesday. Jarrett Seaberg, a policy analyst at TD Cowen, said in a note to clients that Thune's movement meant, quote, a limit what amendments can be considered before a final vote on the package, including making it difficult for backers of unrelated credit card legislation to use stablecoin bill as leverage to force consideration of their own efforts. That was one of the final potential roadblocks to Senate advancement of that bill, which has already drawn strong bipartisan votes as it moved through the process in that chamber of Congress. And the legislation sponsor, Senator Bill Haggerty, had made it clear that the bill faces a very tight window for adoption this year, considering what else is on the Senate's plate. The Genius Act was on the Senate's floor agenda for Tuesday with a 2:30 p.m. amendment deadline. If the Genius Act passes the Senate, it'll then head to the House, where a similar stablecoin bill already awaits, having cleared its own committee's hurdles. At that point, lawmakers will have to decide their strategy on how to proceed, whether to include the stablecoin matter alongside the market structure bill as a single package, whether the House can just take up the Senate's bill as written, or whether or not the House will seek to hash out its very own version. So, in my opinion, that's the end of the article. This bill is kind of far from the finish line. Just be aware. We're just now through the House, or getting to the very end of the House. Then we've got a whole other thing going on in the Senate. And if they pass it or something like it, then some version of both of these things will end up at the president's desk for signing. I do not see that happening anytime very soon, but maybe sooner than I foresee. I don't know. Well, let's move on to talk about opportunity cost. Marty Bent from, well, TFTC, used to be called Tales from the Crypt, but they rebranded themselves Truth for the Commoner. Long time podcast in the Bitcoin space. Very well loved. I love the guy myself. Have yet to be able to meet the guy. I've had two opportunities and thought it's like I was in the middle of talking to somebody else, and I was like, oh, well, I'll go talk to him later. One was at the inaugural beef initiative thing in Texas, and I thought he'd be there all day long, but he did like one talk in the morning and then bailed out. I looked around, I go, oh, wait a minute, I was going to go talk to Marty. Where is he? And they're like, dude, his wife is pregnant. He went home. So The other time was at BitBlock Boom, and I didn't get a chance. I did get a chance to talk to Matt Odell, though, for quite a while. But, didn't get a chance to talk to Mr. Bent. However, Mr. Bent speaks to us through this opportunitycost.app is the website. And essentially what it does, it's an extension for your web browser. It's Chrome. Okay, so I don't, if you're using Firefox, I don't know what to tell you other than that makes me sad because last few times I've tried to use Firefox, oh my God, it's so awful. Anyway, so if you got a Chrome-based browser, this will be an extension for your browser. And what it will do is it will sense the cost in US dollars of any website and reframe that website to include that same cost at that particular moment of the day's price of Bitcoin. So like if you're going, like for instance, if you're going to Zillow and it shows the price of a house at like, $1,095,000. Oh my God, for a 4-bedroom, 6 bathrooms. Why do you need 6 bathrooms if you've only got 4 bedrooms? What the F is wrong with everybody? I mean, 3 bathrooms is fine for a 4-bedroom house, man. That's just weird. Anyway, I digress. Let's say you're going to Zillow, you see this house listed for over $1 million. It automatically adds right next to it, this extension automatically adds on the website itself, mind you, the price of that house in today's price of Bitcoin at that particular moment. I think that this is good. So you could go to Amazon and it would do the same thing. You could go to any place that's showing you the price of something. This extension will sense that and say, you need to put in, drop in this frame right here, right next to that price, and what that would actually cost in Bitcoin. So it sounds easy, but that kind of thing is hard to execute because you're basically dealing with everybody else's website and websites you don't even know about. And somehow or another, this extension is able to slip the price of BTC alongside the USD. I think it's a great idea. He's been talking about it for a while. It looks like it's finally dropped. It's opportunitycost.app, opportunitycost.app. That's opportunitycost.app. And you can extend it or install it as an extension to your Chrome browser. Now, on to the land of milk and honey that we also call Ukraine. Crypto Asset Reserve Bill has landed in Ukraine's parliament. Helen Parch from Cointelegraph says Ukrainian lawmakers have introduced a draft bill. It's a draft that would allow the National Bank of Ukraine to include cryptocurrencies like Bitcoin. It was submitted to Ukraine's parliament, the Verkhovna Rada, I can't pronounce any of this crap, on Tuesday, and is entitled Bill number 13356, and it proposes amendments to the law, quote, on the National Bank of Ukraine, end quote, regarding the inclusion of crypto assets alongside gold and foreign currencies, while authorizing the central bank to acquire cryptocurrencies like Bitcoin as part of the state reserves. The bill would not require the authority to do so, according to Yaroslav Zelensky, a member of parliament, who confirmed the introduction of the bill on his Telegram channel. The central bank would retain full discretion over whether to allocate any portion of its reserves to crypto, how much to allocate, and when to do so. Quote, how, when, and how much should be the decision of the regulator itself, Zelensky said. Although leaving the final decision for the National Bank of Ukraine, the lawmakers support the creation of a potential state crypto asset reserve as a step that will integrate the country into global financial innovations. Quote, proper management of crypto reserves will help strengthen macroeconomic stability and create new opportunities for the development of the digital economy, the man whose name I can't pronounce wrote in a statement on Telegram. Okay. So using Telegram. Well, at least it wasn't a tweet, right? Anyway, he discussed the potential state crypto reserve in a video commentary with Binance's regional head of Central and Eastern European countries in Central Asia, Karolyo Kamenkov. these names, who helped the lawmakers write the draft bill. Okay. Additionally, contributors to the bill include Peter Bilyuk, head of artificial intelligence practice at the local law firm Just Kutum Legal Engineering, and a member of Ukraine's expert committee on AI development. So AI is collapsing into crypto in the eyes of Ukrainian parliament as to how they're stitching this together. That's actually kind of interesting, honestly, because I'm pretty sure that AI agents and, in the future, like, agent type robots that are actually doing stuff, probably going to have to use machine money for certain things like charging their batteries or getting repaired or something like that. It sounds like science fiction, ladies and gentlemen, but it's not going to be, because either, look, here's the way this works. And this is what that's the end of the article. I'm just going to say this. People kind of poo-poo the thought that AI agents are going to use Bitcoin for their monetary unit. And if we extend that into robotics, like, machines, like why would we pay these machines? And no, we're not paying the machines. We're not really paying the AI agents, although that could be a thing, because if it's a service, or it's, a service as a subscription, or subscription to certain, whatever you want to call it. If you've got a subscription for something that's doing you good, like a robot that's, I don't know, cleaning your house all day, or AI that's helping you book plane tickets, whatever it is. If it has value to you, then you might be paying it money, or paying the people that built it the money. So that's where a lot of people get confused, is they say, well, you're not going to be paying the robot itself, and you're not going to be paying the AI agent itself. You're going to be paying the people that built it. Yes, this is true. However, think of it from a management standpoint. If I have a service, let's say that I have a service of robots that comes and, I don't know, cleans your house, like a robotic maid service. You pay me, and I have to keep up the maintenance on the robots and do all the stuff that makes sure that they can get to your house and clean your house. What if I don't want to do that management? What if I just say, why don't you just install a module into, the computer, the central computer core of this robot that basically says, hey, buddy, you need to take care of yourself. Here's your weekly allowance. And that allowance is in machine money, and it's probably going to be Bitcoin and probably stablecoin. I'm not a fan of stablecoin, but I'm not going to get rid of it all by myself. So there you go. If you have a situation that is unmanaged, like the maintenance of a robot, then the robot is going to die. It's going to fall apart, and it won't be able to complete its mission, right? So it's not going to be making you any money. So therefore, it has to be managed. So the question becomes, who manages it? Are you going to manage it by fixing it yourself, or are you going to enable that robot to manage its maintenance all by itself? And if you do, then who's going to do that work for free? The answer is no one. So unless you want to manage its accounts as well, like let's say you program it to go to the robot shop to get fixed up, or get its 6-month tune up, or whatever it is you do, then you've got to manage the finances. Okay. You're not managing the maintenance. You've offshored that to somebody else because you don't want to do it, but somebody has to manage the maintenance. So you're still stuck with the money management part. You've got to do the transaction with the guy that's fixing your robots. If you don't want to do that management, then you have to offshore that into the robot itself. See how this works? So I think that AI and crypto are going to become very, very, very close cousins to each other. And I'm not the only one that thinks so. Just saying. Let's move on to economic Bitcoin nodes. Why you need to use your node for it to matter. This is Shinobi from Bitcoin Magazine. What is an economic node? To understand that, you need to first conceptually understand how a user interacts with the Bitcoin network in the first place. Bitcoin is a database and a network to facilitate the updating and synchronization of updates to that database, used for the primary purpose of people transacting Bitcoin, which is entries in the database. The primary concern of a user making use of Bitcoin for this purpose is the validity of the transactions that are sent to them. For example, is the money they have received valid in the sense that when they go forward in the future to spend it somewhere else, that other people will also widely accept it as valid? If that is not the case, then it is useless as money. This is the purpose of a node, to verify these transactions. In order to do so, your node must have a complete set of all the existing coins or unspent transaction outputs, also known as UTXOs, in order to check every proposed transaction against. When a transaction is broadcast, your node verifies that the coins it is spending are in this, quote, UTXO set, meaning that they have not been spent yet. When that transaction is confirmed in a block, those individual UTXOs are then removed from the UTXO set, and the new ones created by the transaction are added. In order to compute that UTXO set in the first place, a node must parse through the entire historical record of all past transactions contained in the blockchain, going through the process of adding each newly mined UTXO to the set and removing/adding all the consumed and newly created UTXOs processed in each individual block. Without doing this, there is no way to be certain that the current UTXO set stored in your node is actually accurate and valid. In the future, zero-knowledge proofs may obviate the need for this by replacing the historical blockchain with a succinct cryptographic proof that any given UTXO set is valid for a specific block height. Your node is simply an agent for you as an economic actor, in the sense of automated AI agents that many LLM advocates speak about. It is an autonomous program acting on your behalf in a certain context, in this case guaranteeing the validity of Bitcoin transactions to ensure that when you are the recipient of one of those transactions, the chain of transactions that created the coin spent to you is actually valid. An economic node is simply a node that is actually being used by someone engaging in economic activity to ensure the validity of the coins they are receiving. Why is that so important? Why do only these nodes matter? Think about what makes Bitcoin function in the first place. People running the same consensus rules. The only reason there is a coherent singular Bitcoin network is because everyone is running the same consensus rules. When miners produce blocks, every individual node arrives at the same conclusion as to whether or not it is valid. Every individual node will follow whatever is the blockchain composed of valid blocks that has the most proof of work attached to it. There is only a singular coherent Bitcoin network because each individual actor chooses to enforce the same set of consensus rules against blocks that miners produce. It is purely voluntary association, voluntary subjugation of oneself to a certain set of consensus rules. So to illustrate the point, let's imagine 3 different scenarios of nodes deviating from the existing set of rules. In the first, imagine a few major exchanges like Kraken, Coinbase, etc., all alter their consensus rules from the rest of the network. These nodes represent the economic platforms where Bitcoin is traded and its price established in fiat terms. Nodes running conflicting rules from them or making transactions that will not be recognized as valid by their nodes, to be more specific, now cannot engage in that market. Those exchange nodes will not recognize user deposits as valid, and as such, they will not be able to deposit coins and participate in those marketplaces. Other nodes can band together, but they cannot capture the economic power of those exchanges. Ultimately, short of the value of the coin created by the rule set they are enforcing crashing to nothing, other nodes on the network will have no choice but to adopt their rule set in order to interact with them. Otherwise, the exchanges will simply ignore and honor deposits their nodes consider invalid. In the second scenario, Let's imagine a group of much smaller businesses and users that regularly receive transactions. Maybe all of them together amount to the economic activity of a single exchange like Coinbase. These users choosing to alter their consensus rules is not as inescapable as a number of large exchanges in concert, but it's still significant. Here, other users can still access marketplaces like exchanges to ensure that Bitcoin is being priced by the market. The majority of the network will still accept everyone else's coins in receipt for goods or as deposits to trade on marketplaces, but they still represent a sizable portion of economic activity withdrawing from the rest of the network. This is leverage they can use. Even as a minority of the network, the likelihood is extremely high that there are sufficient levels of economic activity crossing between this minority of nodes and the rest of the network. This is not a clear case of leaving the rest of the network, no option, but to adopt the new rules. But it definitely creates pressure for large portions of the network who interact across that gap. From there, the more users that choose to cross the gap because of who they economically interact with, that pressure grows larger for the rest of the remaining network. Then in the last scenario, let's imagine a group of nodes representing a small set of users generating very little or no economic activity at all, and these users choose to alter their rule set. They receive almost no payments. They represent a rounding error in terms of economic value on the network. They're irrelevant to the rest of the network. Large businesses, exchanges, other economic actors, they will not care if a handful of people stop patronizing them or sending them Bitcoin for different reasons. This set of nodes altering their consensus rules doesn't matter. They create no pressure. They create no opportunity cost that matters for the rest of the network. An economic node's influence on the overall consensus of the Bitcoin network is proportional to the amount of economic activity involving that node and its owner. A node that is not being used for this purpose is completely irrelevant to the consensus rules of the Bitcoin network at large. It creates no economic pressure, imposes no opportunity cost on the rest of the network when it alters its consensus rules. It is indistinguishable from a participant in a Sybil attack. There might be other reasons to run a node besides verifying your own transactions, such as direct access to blockchain data for research or analysis purposes, but ultimately, that node is irrelevant to consensus. This dynamic is why Bitcoin cannot be Sybil attacked. It's why some malicious actors can spin up 1 million nodes on Amazon Web Services running different consensus rules, and it will have zero effect on the actual Bitcoin network. Your node doesn't matter unless you use it. So use it. It's the end of the article by Shinobi out of Bitcoin Magazine, and he makes a lot of sense. For a recap, I run a full Bitcoin node. My full Bitcoin node is indeed an economic node. Why? Because when I make transactions, I literally use my node for everything about that transaction. I have a Spectre wallet. I create a transaction. That Spectre wallet is actually on my Start9 node. It is directly connected to my Bitcoin full node. That's how it's able to do all of the things that a wallet does. It can read the blockchain. It knows what consensus rules are in play. And when it makes a transaction, it follows those consensus rules so that that transaction will be considered valid by the rest of the network. Then, when I make the transaction, if I want to follow it on mempool.space, I have mempool.space so I can see where my transaction is. Has it been confirmed? Where is it in the block? Where is it in the block? Is it like 15 blocks from now before it gets mined? Is it in the next block? I don't know. I have to go look at the actual transaction in mempool.space to figure that shit out. My mempool.space instance is running right next to my Bitcoin full node, again, on my Start9. And the reason it knows exactly where it is in the blockchain is because it's querying the blockchain that I have a full copy of on my node to find out where in the chain it is. How much fees did I pay? Is it following the consensus rules? That's what an economic node is. At the level of a single user who is, I don't know, buying a gift card from Bull Bitcoin or something like that, right? Or if I'm sending, Bitcoin to, if I'm sending Bitcoin to an exchange because I got to sell it because I don't know, I got to pay a power bill or something like that. I'm using my node. So my node does matter. For a long time, my node didn't matter. I was running a Bitcoin full node, but you know how much economic activity I was actually leveraging it for? Zero. So therefore, it was not an economic node. I used to be of the mind that as long as we just spin up a whole bunch of nodes, that we were going to protect the Bitcoin network. That is not the case, and it is certainly not what Shinobi is saying here. When I say that you should run a full node, it means you should also use your full node. I recommend my node BTC, and I also recommend Start9. I decommissioned my old Bitcoin full node, which was a my node BTC. I loved it. It was great. It worked fine. I'm really in love with my Start9 server pure. I love this thing because it does a bunch of stuff other than just Bitcoin, but it is where all of my Bitcoin and Lightning and mempool and wallet stuff, that's where it all occurs. I have an economic node. You should too. Economic nodes are sweet, just like Oshi products are sweet. They're awesome. They're totally awesome. In fact, www.oshigood.us. Oshigood, OSHIGOOD.us is where you're going to go to pick up your jars of HODL butter, your BTHC node candies that have THC in it. You're going to be able to get Oshi stickers. You're going to be able to get mint chocolate chip? No, I'm sorry, banana chocolate chip HODL bars. His HODL butter is just pecan butter, and everybody that tastes this stuff says that it's astounding. I have yet to taste it, but what I have tasted is the HODL bar. It's just chock full of dates and all kinds of good stuff, man. I mean, it's like right now he's actually out of stock on that, but the ingredients are this: dates, pecan butter, which is that HODL butter that he talked about, dark chocolate chips, banana powder, peanut flour, chocolate powder or cacao powder, vanilla extract, cinnamon, and sea salt. I mean, it's a 2.5 or a 2.4 ounce bar, but I got to tell you, man, this stuff packs so much like instant energy. Like if you're on a trail hiking or running or doing something and you're like hungry and you need some energy, this is where you need to go. Oshigood.us. Oshigood.us. Use the term Bitcoin and in the coupon code. He's not given a discount, right? Just be aware. There's no 10% discount for using Bitcoin and. But this is the Circle P. And if you support Oshi and you tell him, hey, I heard about your stuff on the Circle P from the Bitcoin and podcast, then Oshi knows I made a sale for him. Oshi gets to determine how much that sale is worth to Oshi. And then he sends me that value in sats. This is value for value advertising. I do not have sponsors. I do not have promoters. I don't get a big fat check from CoinKite or Coinbase or any of like these larger companies, right? Everybody else has those sponsors. They don't need me. They don't need me selling their products. You know who does? People like Oshi, people like Soap Miner. That's what the Circle P is about. It's about giving the plebs a place to put their products in front of people to try it out because they love making this stuff. Maybe I could almost guarantee you that almost all of the people in the Circle P would rather be making the stuff that they sell in the Circle P as their main form of income than to go to any fiat job that they actually have. I can guarantee you that. So when you support them, they can support me. And then I can support you by bringing you the Bitcoin news that you can use. Last up, Bitcoin climbed slightly as the United States report on inflation says that inflation slowed in May. This is James Rubin out of decrypt.co. Bitcoin gained half a percentage point after the May Consumer Price Index showed that prices rose 2.4% in May, showing that U.S. President Donald Trump's trade war has had limited impact on prices. The 2.4% increase is lower than all 73 forecasters predicted. The largest cryptocurrency by market capitalization was recently hovering just below 109,000, but has now risen closer to 110,000. All right, that's all that we need to know from this particular story. When they talk about this is causing the price of Bitcoin to rise, that's sort of kind of counterintuitive to what this actually means, unless more and more institutional and retail people are not looking at Bitcoin as a risk asset anymore. Here's why. Trump has been trying to get Jerome Powell to lower the federal fund rate so that we can get cheap money so that we could do things like buy houses. Jerome Powell's not budging. He's recalcitrant. He's remaining in place. He is not moving. He's not budging. He's been telling verbally everybody that he has no reason whatsoever to lower the Fed funds rate. So therefore, there's no cheap money so that you can go buy risk assets. Generally speaking, what happens when we get news that confirms that he's not going to lower rates yet one more frickin' time is that we see a price drop in risk assets. And that would include Bitcoin unless sentiment is starting to change across the globe, or at least in the United States. Why? This news that inflation really didn't rise as much as possible as 73 forecasters thought it would gives Jerome Powell all the ammunition he needs to go into June and July and say no yet one more time. He doesn't need to lower the federal fund rate. He's going to say, see, it's working. By not lowering the Fed funds rate, we are not accelerating anything. But if we lower the Fed funds rate, we might see a bump in inflation. And since inflation is clearly coming down to the chagrin of 73 probably Nobel laureate Keynesian economists, he's right. He doesn't want to screw with that. And therefore, you are not going to see Fed funds rate drop. Not unless something bad happens to Jerome Powell. And I don't want anything bad to happen to anybody. I'm just saying this story seems a bit, or the price action on Bitcoin seems a bit counterintuitive to what I've seen in the past. But like I said, what if sentiment is changing on Bitcoin as a risk asset? That could be interesting. Meanwhile, we will run the numbers. Futures and commodities, energy sector kicking ass today. Hell, even natural gas is up, even though it's crawling sideways. But oil, West Texas Intermediate, is up 2.5 points to 66.59. Brent North Sea is up 2.15% to 68.31. Natural gas is just switched to unchanged, and gasoline is up 2 1/3 to $2.13 per gallon. Of course, the gasoline price is more in tune with summer driving season than it is with actual gas or rather oil and natural gas prices. But gold is up 1/4 point to 33.51 and 4 dimes. Silver is down a point. Platinum is up 4 points. Copper is down 1.6%. Palladium is up 1 1/4. Ag is mostly in the green today. Biggest winner, lumber is the winner, 1.66% to the upside, and the biggest loser is coffee, 1 1/4 to the downside. Meanwhile, live cattle crawling sideways slightly in the green, lean hogs up 1/4, feeder cattle down 1/2. The Dow is up 1/3, S&P is crawling sideways in the green, NASDAQ is up 1/10 point, while the S&P Mini is down 0.07%. Meanwhile, Bitcoin chilling out at 109,420. No, literally, it's 420. $2.18 trillion of market cap, we can get 32.6 ounces of shiny metal rocks with our 1 Bitcoin, of which there are 19,877,310 and a quarter of. Average fees per block are really, really, really low. And we have 5 blocks carrying 6,400 transactions waiting to clear at high priority rates of 3 Satoshis per VByte. Low priority is going to get you into 3 Satoshis per VByte, and the hash rate is banging 916.9 exahashes per second. Whoop-de-frickin-do. Flop return, which was yesterday's episode of Bitcoin, and I got Bitcoin Arborist gave me 5,000 sats. Thank you, brother. He says, great episode. Thanks for elaborating some in this op return bullshit. Confusing bullshit like this makes me sometimes think that BTC is over my head as a lowly, hard-working fiat mining pleb. Tried listening to the op return debate and can't help but think I'm over my head in this asset and spiral into paranoia that clearly I must not know enough to even sit on my cold storage stash without fucking that up when the moment comes when I want to borrow against it or whatever I'm going to do. Too much shit to follow. This op return shit reminds me of after I fell in love, after reading the Bitcoin Standard, and then read Mastering Bitcoin and thought, or read Mastering Bitcoin and thought, quote, who the hell you kidding with this shit above your pay grade, end quote. Your pod helps me get back to the fucking meat and potatoes of stay humble and stack sats. Fuck op return, I think, maybe. Bitcoin Arborist, thank you, sir. I appreciate that. The whole goal of this podcast is to kind of comb through all the news on a daily basis and to keep people calm. Man, I've seen all this shit before. I've seen it before. And guess what? I get to see it all again. I've seen all of the shit that if you're new to Bitcoin and you're wondering about this op return stuff or ordinals or whatever fight of the day is going on, not only have I seen it before, I've seen it before 3 different times, wearing 3 different dresses in 3 different colors on 3 different chicks. It's the same shit, different girl, different color, different dress, but it's still a chick wearing a dress. Everybody calm down. We don't need to get all up in a tizzy. And it looks like Bitcoin Arborist gave me another 2,100 sats, but didn't say anything. Thank you, sir. Jub with 1,000 says Bitcoin and is quickly becoming my most anticipated podcast. I think this is the beginning of a beautiful friendship. Dude, thank you. I appreciate that. Psyduck with 714 says Psyduck. Yodel 511. Pampeat. Turkey with 500 says nothing. I like it better when you say something, Turkey. Permanent with 210 says thank you, sir. No, thank you. And I think that's the weather report. Welcome to part 2 of the news you can use. Remember what Bitcoin Arborist was saying back there during the weather report about being confused, not thinking is out of his depth because of all the bullshit that's going on, not quite sure if he's going to screw something up? Yeah, here we go. Strategies, rising holdings, risk-making Bitcoin inappropriate for central bank reserves, Sygnum warns. Now, before we get into this from James Hunt out of the block, let me just say this. I've been seeing this for the last 2 days, not the Sygnum report. Well, it's probably all falling out of the Sygnum report, but different pundits, different influencers over there on the Twitters, all saying, all of a sudden I start seeing this narrative pop up. Oh my God, they're buying too much Bitcoin. I've seen all this before. I'll see it again. Let me just say this. Bitcoin is for enemies. Nobody, not you, not me, not anybody else, can stop Strategy from buying more Bitcoin if they want it. We cannot stop other institutions and banks, whether they want to or not, to buy Bitcoin. We cannot force the hand of anyone to either buy or not buy the coin. This is good. Why? Because if we could stop somebody from buying Bitcoin, then Bitcoin failed. It is simply that easy. If you don't understand that, then this is the wrong space for you. The whole point of Bitcoin was freedom of economic activity that is unhindered by government and other institutional irrationalizations on what they think money is. It's about the best I can put it. So let's get into why everybody's freaking out about this bullshit. Bitcoin acquisition vehicles like Strategy have significantly amplified institutional demand for Bitcoin, but their increasingly aggressive and leveraged approach to accumulating Bitcoin risks undermining the asset's credibility as a central bank reserve, according to a report from regulated digital asset bank Sygnum. That's spelled Sygnum, by the way. On Monday, Strategy announced it had purchased yet more Bitcoin, taking its total holdings to 582,000 Bitcoin. There are now 144 companies that have adopted some form of Bitcoin treasury, 114 of which are publicly traded, with Tether-backed 21, Nakamoto, Trump Media, GameStop, and K33 recently joining the fray with the likes of Metaplanet, Similar Scientific, and KULR, which sounds like a radio station I would like to own, but they're all adopting the model pioneered by Strategy co-founder Michael Saylor. Analysts at Bernstein predict Strategy and its corporate copycats could add $330 billion to their Bitcoin treasuries over the next 5 years, driven by the more pro-crypto Trump administration in the United States. With Strategy's plans to expand these holdings further over time through various multi-million-dollar financial programs, Sygnum warned that such concentration introduces systemic fragility, potentially deterring central banks from adopting Bitcoin due to concerns over liquidity, volatility, and centralized influence. Quote, large concentrated holdings are a risk for any asset, and at that point, Strategy's holdings are approaching a point where they become problematic, with the company holding close to 3% of the total Bitcoin ever issued, but a much higher share of the actual liquid supply, the Sygnum analyst said. Quote, their goal of acquiring 5% of the total issued Bitcoin raises concerns, not least because these vehicles amassing too much of the supply undermines Bitcoin's safe haven properties. A private corporation controlling a large portion of the existing supply would make Bitcoin inappropriate for central banks to hold as a reserve asset. End quote. What began in 2020 as a corporate treasury strategy to hedge inflation has transformed into a speculative investment vehicle model. Sygnum continued, with companies like Strategy and newcomers such as 21 Capital or Nakamoto Holdings now using debt, convertible bonds, preferred stocks, and even perpetual instrumentation to leverage Bitcoin purchases beyond the scale of their underlying business operations. These firms now function more like closed-end funds than corporations, raising doubts about the appropriateness of framing such activity as treasury management, the digital asset bank said. They added this, quote, the steep drop in the liquid supply can also reverse the structural trends of declining Bitcoin volatility and rising liquidity, both of which has been cited by institutions and central banks as key preconditions for adopting Bitcoin as a reserve asset. These effects, the analysts argue, are now being distorted by leveraged acquisition vehicles crowding out organic demand. Beyond niche cases like El Salvador, very few central banks are currently even considering adding Bitcoin to their reserves, and even fewer are enacting such plans. However, in March, President Trump did sign the executive order to establish the strategic Bitcoin reserve. God, I lost it again. Good Lord. I can't even read anymore. There we go. Sygnum argues that these leveraged Bitcoin strategies while initially benefiting from strong bullish sentiment and helping reduce liquid supply, are unsustainable in the long term. Share price premiums over BTC holdings are already at risk of eroding or flipping into discounts, especially as more such vehicles launch and investor demand plateaus, the analyst said. Bear markets or fundraising difficulties could force these companies to sell Bitcoin, amplifying price downturns and further damaging sentiment, they added. The trend also may crowd out more measured corporate Bitcoin allocations in Sygnum's view. Unlike speculative accumulation plays, small Bitcoin positions can serve as prudent hedges in a volatile global financial system. However, these vehicles risk giving the impression that Bitcoin is inherently tied to leveraged speculation, potentially undermining thoughtful adoption by institutions, they added. Quote, these vehicles have catalyzed demand for Bitcoin that cannot or cannot yet access the crypto market. In this regard, they have made a contribution similar to the impact of the Bitcoin ETFs. They have also tremendously benefited shareholders of these companies by investing funds into a safe haven asset instead of into a flagging business, the analyst concluded. Quote, however, as demand levels off and is saturated by increased supply, the valuation of these shares relative to their Bitcoin holdings becomes at risk. Additionally, these strategies also create certain risks for the crypto market as a whole, end quote. So, what are they saying? Sounds to me like Sygnum, I'm going to say a couple of ways. Sygnum has some good points here and a really bad take. And their really bad take is that, Bitcoin's not going to be adopted by central banks. Good. I'm glad. I need all the central banks to die in their own filthy water and drown in the scum-sucking pool of sewage that they've created for themselves. That's what I want. And how do they die in their scum-sucking pool of sewage that they've created themselves? Well, they don't buy Bitcoin. It's that simple. They end up filling their own nest with their own fecal matter because they can't stop shitting in the water. And essentially, they just poison themselves. And I'm talking about fiat creation. And central banks are part of that particular machine. If they don't buy Bitcoin, I feel good about that. In fact, maybe that's the plan of Saylor. Who knows? I actually don't think it is. I think he's not that, mechanistic about, his 4D chess playing. But maybe. He's not dumb. But they do have a good point. He is buying an awful lot of Bitcoin. A lot of institutions are buying an awful lot of Bitcoin. The more Bitcoin they buy, the less there is on the street for the common pleb like you and me. That's kind of bad. But then they go back and make another bad point, that this accumulation is going to crash the price of Bitcoin. I've seen crashes of Bitcoin before. You know what happened to me? Nothing. I didn't die. I didn't stop feeding myself. I was still able to locate the bathroom in the middle of the night when I woke up having to pee. So honestly, it really didn't change much for me. So this seems like a report that's more based in, in being a progenitor of fear. And I don't like that shit. In fact, I don't like this report at all because it did absolutely nothing to be well balanced. It's very, very concerned with whether or not central banks and massive institutions have an appetite for Bitcoin, and therefore Bitcoin's going to die. It brings up the point that as the institutions that are buying Bitcoin, they're buying too much Bitcoin, and that's going to cause Bitcoin to die. There's really not a whole lot in this particular report that is balanced and neutral. So, in my opinion, this is simple fear-mongering. For whatever purposes, I don't know. That's the real question here. If I'm correct, and this report is more about generating fear than it is about telling the truth, then the question becomes who benefits? And I do not have an answer for that. So we're going to move on, in fact, to Connecticut, who has decided to kill themselves for some dumbass reason. Atlas 21 is writing this one. Connecticut says no to Bitcoin law. They didn't just say no. Let's talk about it. Connecticut has taken a firm stance against digital assets by approving legislation that categorically bans all levels of state and local governments from investing in Bitcoin and other cryptocurrencies. So they didn't just say no, they banned it. They banned Bitcoin in Connecticut. This is an effective state, municipal, county, city level ban on holding Bitcoin. Now, you as the citizen can do it, but no state agency, no municipal agency, no county agency will be able to touch Bitcoin or any other digital asset for life. That is an effective way to blow your brains out with a 1911 gun. Now, on June the 10th, the Connecticut General Assembly published the final text of House Bill 7082, which has now become Public Act number 25 through 66, or rather, Public Act number 25-66. The legislation was passed unanimously by both the House and the Senate, which signaled bipartisan agreement on the need to keep public finances away from the cryptocurrency market. Unanimous votes in both the House and the Senate. I could probably count on one hand the amount of times that has happened ever, no matter the state or even at the federal government level. Unanimous. They unanimously banned the holding of Bitcoin by any agency in the state or city in both the House and the Senate. Let that sink in. Let the bells of tyranny ring throughout your head. This is Connecticut basically saying, you know what? We all want to live in a teepee out on the plains, and we're just going to make our own clothes by skinning animals. Oh my God, dude, this is ridiculous. Even the Quakers have better sense than you guys. And well, actually, that's an insult to the Quakers, honestly, because they actually live a pretty good life. I'm just saying. The new law establishes an outright ban on government entities purchasing, holding, or investing in Bitcoin and other cryptocurrencies, and it also prohibits the creation of any virtual currency reserve and the acceptance of crypto payments, in addition to restrictions on the public sector. The state's legislation introduces consumer protection measures for private individuals. Oh, they get to tell their citizenry how to live. Crypto businesses operating as money service businesses will now be required to disclose all material risks associated with cryptocurrencies through clear, conspicuous, and legible writing in the English language. This is a temper tantrum from Connecticut. That's what this is. This is not legislation. This is a temper tantrum. Clear, conspicuous, and legible writing in the English language. So I guess we don't have to put it in Spanish. I'm sure there's no Mexicans, no El Salvadorans, no Hispanics, Latinos of any kind, way, shape, or form that live in fucking Connecticut that read, they don't read English. You don't say you got to write it in Spanish too, and you have to write it in Mandarin? No. This is how I know this is a fucking temper tantrum. This state is screwed. I'm sorry, but you guys in Connecticut are just fucked. Another provision addresses the protection of minors. Oh my God. Think of the children. The new law mandates legal guardian verification for all users of cryptocurrency under the age of 18. God. It's like reading something out of Eastern Europe. While Connecticut adopts a restrictive position towards digital asset, several other U.S. states are moving in the opposite direction, and we already know about all that, even though some of these dumbasses have hosed their future because they voted down a bunch of bills. And I haven't heard about any new bills coming in. It's late in the legislative session for states, so it doesn't surprise me. if you live in Connecticut, get out, get out, get out. And it's not because you need them to adopt Bitcoin. Nobody needs to adopt Bitcoin. They need to stop adopting restrictive measures that they put on themselves and then go further and place it on their citizenry. Anybody that does that will do it with other things too. The unanimous nature of this vote is what's the most concerning. Holy shit. In this clear and conspicuous legible writing in the English language bit, yes, because only people in the people in Connecticut, they only speak English. Never mind. I was going to go on a rant. I'm not going to do it. Quantum Biopharma boosts digital asset holdings to $5 million with yet a new Bitcoin purchase. This is out of Bitcoin Magazine, written by Jenna Montgomery. Jenna, take us for a ride. In an expansion of its digital asset portfolio, Quantum Biopharma Limited, Quantum Biopharma has announced the purchase of an additional $500,000 in Bitcoin and other cryptocurrencies. Read that as, yes, they're shitcoiners, bringing its total holdings to $5 million USD. The Canadian biopharmaceutical company made the move after securing approval from its board of directors. Quantum Biopharma Limited is pleased to announce that after receiving approval from the board of directors, the company has purchased additional Bitcoin and other shitcoins as part of its strategic efforts. This brings the total amount of BTC and other cryptocurrencies purchased to $5 million. This investment marks another step in the company's growth, reinforcing its broader strategy to include Bitcoin in its long-term financial planning. If you don't know what Quantum Biopharma is and what they do, and I think it's important to start asking ourselves questions about when a company becomes a Bitcoin holder, what is their underlying revenue model? And this is sort of a callback to the argument that was made in Sygnum, right? But I've always made this argument when it came to strategy. It is and was a zombie company. They weren't really providing anything new. They were just servicing their old clients. Doesn't seem to me like they were coming up with anything new or innovative. They just had this business intelligence software suite. And I can't believe that, SAS and Oracle hasn't just completely ripped apart their market share. So of course they were going to pivot to something else. It's either that or just close up shop and send everybody home. And no leader of a company wants to do that, right? But it doesn't mean that I can't be at least interested in what the business model of a company that decides to adopt Bitcoin is. Steak and Shake isn't really adopting Bitcoin. They're just allowing payment in it. But I know what they do. They sell burgers and shakes and fries. Okay, that's a simple revenue model. I'm hungry. I got money. I walk into Steak and Shake. I want a burger, fries, and a shake. They give it to me and I give them money. That's the revenue model. It's clean. It's simple. It's not complicated. But what does Quantum Biopharma do? Well, what we know is that they're known for their work in the biotech space, particularly through its subsidiary Lucid Psychoceuticals. That's a hell of a name. Lucid Psychoceuticals Incorporated, and they focus on neurological treatments like Lucid MS. With this latest Bitcoin investment, the company joins a growing list of firms hedging traditional finance strategies with Bitcoin. So what is Lucid MS? I'm almost guaranteed that it has something to do with the treatment for multiple sclerosis. But let's just see. Lucid MS is a patented neuroprotective compound that is demonstrated in preclinical models to prevent and reverse myelin degradation, a cause for multiple sclerosis. So myelin, if you want to know, is this insulatory sheath that runs the length of the neurons in your brain, spinal cord, and the rest of your neuro system, right? Think of two wires that are crossing together. If they don't have insulation on themselves, the wires are going to short out against each other because the copper is directly against each other and electrons are going to jump from one wire to another, and it causes problems. You got to keep your wires separate. That's why when you pull wires out of the wall to do some electrical work or whatever, they're covered with rubber. They're insulated. That's what myelin does. So when you get multiple sclerosis, the myelin sheath starts to degrade from the neurons and you get what's called crosstalk. And it causes all kinds of fucking problems, hence multiple sclerosis. And if you've never seen anybody with multiple sclerosis, you might want to look that up. So at least we have a product. And multiple sclerosis is, it's a thing. It's not unusual. It's not widespread, but it's also not unusual. And it is a painful, miserable looking existence. So at least these guys, they do something. And they're stacking Bitcoin so that they can, hopefully, they're stacking it because they want to be able to continue to do the thing that they do. And that's when Bitcoin becomes simple. I keep thinking about it. I was listening to Untapped Growth on the Acres USA podcast. Is it Joel? I think his name is Joel Hollingsworth, but it's Joel Untapped Growth on Twitter and on Nostr. He's found his way to Nostr. So good for you, Joel. An hour and a half of talking about pasture, soil health, cows, genetics, how all this interacts with each other. And then he brings up how screwed the financial system is and why that's causing problems in ranching like it is and affecting beef prices, which it is. And he mentions Bitcoin several times. And it dawned on me while listening that Bitcoin becomes very simple if you let it actually complete the mission that it was designed for. So what is Bitcoin? Several people have several different definitions. And I started thinking about, well, what's mine? It's simply hard money that's not controlled by a single entity. That's the important part. It takes care of the hard money thing. The fact that it's not controlled by an institution or a government or a small group of people, and don't say fucking core. I'm tired of this argument about op return. Core doesn't control Bitcoin. I do not have to upgrade to version 20 or to version 30.0. I can stay at version 29.0. There was a guy that was in my that I think it was on Nostr, who had listened to yesterday's show where I said something about this, and he said, "Yeah, but you don't get bug updates." Okay, and I don't disagree with that. That is understandable, but I have to push back a little bit and say, how many people running versions 1 through 28 have been hacked for their Bitcoin off of cold storage? I have not heard of a single news story. I guarantee you, if that has ever happened, you would hear nothing else by the mainstream media, because they would be able to finally kill Bitcoin once and for all, see it got hacked. The other bugs, I also understand, right? But it's not as big of a deal as people make it out to be. I don't have to upgrade to 30. I can stay at 29 and I can dispense with this entire op return bullshit, right? Because all Bitcoin is actual money that performs the the need that we have for money. The fact that it's not controlled by anyone, except go back to the Shinobi piece about running your own economic node. If you want to help protect the network, you need to have a node and use your node in an economic fashion. Other than that, ladies and gentlemen, that's it. Bitcoin is not complicated. It's not a god, it's not a cult, it's not anything other than this software that finally said, we're going to take money and we're going to turn it into pure math like it was always meant to be, without the ability for some idiot, two idiots, a group of idiots, or a very large section of the world trying to fuck it up. And all you have to do is use it as money, use it as savings, use it as what money is intended to do. We finally have something that can't be broken. And that's all it has to do. And that's what I loved about Joel on the Acres USA podcast, which I'm going to actually have to listen to twice. Not because of the Bitcoin aspect, because of the ranching, cattle nutrition, soil stuff. I am going to fight to get Joel back on. I interviewed him years ago before he did the project that he's working on now. And it is clear to me that man in the last 4 years since I've talked to him, and it may have even been 5 years, in fact, actually, yeah, 5 years since I've interviewed Untapped Growth on this show. He has clearly learned more about genetics and its relationship to animal health, soil health, and all this stuff than he knew when I first interviewed him. This guy seems to be like a machine. I'm definitely going to try to get him on. But the most important part about what Joel was saying is that simply Bitcoin fixes the underlying problems of ranching, meat prices, and why things are in ranching the way they are. And if we would just start looking at the fact that it does fix these things, then a whole new future for ranching opens up in front of us. I'll try to, if I remember right, and I've got like 3 brain cells clicking together, I will try to include the interview that Joel gave on Acres USA in the show notes of today's show. That's it for today, in fact, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.